All right, we got Tony Pelayo from American Pacific Mortgage here to answer some of our questions. We are going to be doing the truths and the myths of VA loans. Question number one, do VA clients have to pay closing costs, and what are closing costs?
So yes, veterans do have to pay closing costs. There is an opportunity for lenders and real estate agents to work together to be able to cover a veteran's closing costs through either lender credit or a realtor offering some of their commission. Most of the time, though, it's a lender who is able to play with their margin and be able to facilitate some sort of lender credit to offset closing costs. And the way they do that is simply to just give the veteran a little bit of a higher rate. Closing costs are going to consist of third-party fees, title fees, escrow fees, appraisal fees. When a big misconception is that closing costs are wrapped into the loan, there is a portion of a veteran's major fees that get added to the loan, and that's called a funding fee, which is insurance against the loan defaulting. However, that can be waived if the veteran is 25% or more disabled. And so, just to reiterate, veteran is due with their own closing costs. There are ways to cover it with credits. And I know, like you and I, James, have put together some deals where we're able to get veterans into homes with less than $1,000 just because we're both willing to pitch in.
So, question number two, does the funding fee tie into the closing costs?
So the funding fee, again, gets added to the loan. You can pay it up front. It doesn't make sense. Like, let's just say you have $1 million VA loan that you can do with zero down, and the funding fee is going to, on a first time use, is going to be 2.3%, which is $23,000. $23,000 on a mortgage is really only about $50 to $60 a month. I'm sorry, it's about $100 a month on $23,000. However, again, if the veteran is 25% or more disabled, they'll be able to file for an exemption. So when your lender pulls your certificate of eligibility, they'll be able to then waive the funding fee and proceed forward simply because you got the disability rating or is a Purple Heart recipient.
So that means the active duties, if you're active duty, you will be paying the $10,000 funding fee because no active duty have a disability rating. So if you're a retiree or prior military and you have that disability rating, you will not get that $10,000 funding fee. Myth number two.
And then let me just add to that, and I'll have to verify this to be true, but when they separate from service, if they do get a disability rating, they should be able to file with the VA to have that refunded. I just had a veteran get his, I closed on his loan. And the tricky part was he had already filed the paperwork for his disability rating, but he hadn't received his disability rating yet. And so about 6 months after we closed, he called me. He said he's got his rating back, and the VA actually refunded him. It was perfect with the $1 million example. It was the second time he used it, so he got $36,000 back.
Next question. What is a seller required to pay for in order to get a VA to accept a VA loan as the offer?
So the VA loan is going to have non-allowables, which essentially means the veteran can't pay for certain things. The termite termite inspection is typically going to be covered by the seller. You know, the termite actual damage, you can add it to the closing cost of the veteran. And so the veteran can be on the hook for most of the time. The sellers are going to go ahead and pay for it. Or again, you're going to have a strong lender, like myself, will always try to pitch in and make sure we offset those non-allowables.
Now I'm going to pass it over to Jeff de Guzman from AnchorUp Homes, and he's going to go ahead and ask some questions about VA lending.
Most of it. I mean, you pretty much already covered most of it.
You're very awkward. Now, this is our first time doing this, so.
So Tony, what is the difference between a conventional loan and a VA loan, and what are the benefits of the VA loan versus a conventional loan?
Yeah, so pretty simple. Like, the VA, in my opinion, is the best loan on the market. The VA loan, hands down, is going to give you the best opportunity. There's no like loan limits, so you can buy a $2 million home with a VA with zero down, and like the qualifications for it are a lot easier. We go based off something called residual income rather than debt to income, you and I have a client right now whose debt to income is at 70%. But because they're a single man, the residual income guideline is only 491 on the West Coast. And so that means that he needs to have $491 left over after all his expenses are paid. And that's why we're able to go to 950,000 on a gentleman that makes about $8,000 a month. And so the VA is going to give you the best pricing as far as rates go. They're going to also do no mortgage insurance. You're just going to have that funding fee if they're not, they don't have disability rating. But a conventional loan, you're going to have a down payment requirement. You're going to have mortgage insurance on less than 20% down. It's a great product, cookie cutter. It's what guys like myself, civilians with a decent financial portfolio, are going to use.
Perfect. But when you use a VA loan, why is it hard? Why do some real estate agents, why don't they like to accept VA loans, Jeff?
Just because it's a government-backed loan, there's going to be certain requirements that need to be met by the lender in order for it to get funded. So that, in my opinion, typically pushes sellers away because they don't want to pay for anything.
Yeah, I think there's a lack of knowledge and kind of a misconception in what we're actually doing with VA lending. A good VA lender, it's probably easier to close a VA loan than any other loan. Like some of the VA loans we close, there's no way they're going conventional or even FHA. And so when it really just comes down to educating the listing side on what it is that you're doing with the VA loan. Last year we had VA loans appraising at $100,000 over list, and conventionals weren't hitting. And you had, rumor had it was the internal VA housing was their internal appraisers were actually going in and kind of just helping the properties and helping the external appraisers find the value so that veterans can get into a home, because again, it's a zero down program and veterans didn't have the money to offset this crazy $100,000 gap that everybody was overbidding. I've never really had an issue with an appraisal or a seller who is going to have to offset some fees for the buyer. Like there's, again, a good lender, a good realtor is going to be able to figure that out. And I think just with the opportunity on the listing side to be able to get the veteran their home, it's a much easier process, and the loan's going to close in a timely manner. It is a government insured loan like you addressed, but again, it's going to be easier to close for that very reason.
Out of your 10 last VA loans, did they appraise at value or more?
Yeah, so I mean, we can just go. I just got an appraisal today on a 785. They went over about 50,000 over the list price, and it was actually the clients who referred me, and their appraisal came back 10,000 over. And what that gives them the opportunity to do is then raise the sales price to meet the appraised value, and ask the seller to then give them back 10,000 in credit, and now their closing costs are all covered and they're added to the loan.
So basically, that client would be moving into the home with maybe $500 out of pocket for their home inspection.
Yeah, that'd be somewhere around that nature.
So with the appraised values, what we're seeing is with the VA, they're more likely to start, what they start quoting is called market conditions. They start saying due to market conditions. That's what we want to see as real estate agents and lenders, is because that means that appraiser knows and understands the current market and how many they're taking in effect, how many offers were placed on that home during the first weekend if it's going into escrow, and take into account why everything's being overbid right now and actually giving the value to these homes.
Yeah, I agree. We've never really seen what in the real estate market, what we've seen over the last 2 years. I mean, you can argue that pre-2008, when the subprime market took off in 05, 06, that you saw appreciation like we have over the past 2 years. The difference being that we didn't have 40% of the American dollar being printed during this growth period. And so market conditions truly a factor of the current supply and demand market, along with the inflation rate that we're experiencing. It really is incentivizing the appraisers to come in with higher values and really address the increased purchase prices and the overages that you see on homes that are listed at 400 with offers up to 500. And I think a good opportunity is really what the three of us have started building our career on is down payment assistance and how we're able to use that to get to people into homes. You know, Jeff's, you've done a couple DPAs with me. What have your experience been like with dealing with that type of clientele?
With those for the FHA DPA programs, these are clients that are really, really interested in, they want to get into a home. They want to do everything that they can, but sometimes they don't have, enough money to pay for everything. So with the DPA programs, it really helps them out a lot. And in the long run, it's just the same shit, sellers are still going to get paid. It's just, I don't know.
He cussed and he's unprofessional, so don't mind that.
Nah, I'm just me. That's just how I talk.
Yeah.
My bad for cussing.
It's all good, player. That's what we are. I think that, as we start to do these more often, what makes us a pretty strong team thus far has been that we're not the conventional lender or realtors. Like, we're not suit and tie. I think we're more down to earth and we're able to kind of connect with the different spectrum of people, really the majority. I know that, I was just got off a conference call with some of my borrowers from NorCal working at Apple, working at Gap on the tech side, and it's like, they're working with US Bank, who's a suit and tie guy, and they're working with us, and our conversations all laughs, and at the end of the day, the product's the same. It's money, it's houses, but it's about really creating that connection with people. The down payment assistance personnel, they feel comfortable with us. The VA, the veterans, they feel comfortable with us. Our look probably wouldn't jive, or our inability to not cuss every other word, maybe in Santa Monica wouldn't work out. We'll probably get fucking flagged and kicked out of there, but out here in Riverside where we're at, let's go.